Well, good morning. Yes, folks, it's me, Kenny Polcari, your host of the party, and today is Thursday, May 23rd, 2024. And here's what you need to know. Well, once again, I'm going to start by saying it is a spectacular day outside, like it was yesterday, and it ended up being a spectacular afternoon post-market. We'll talk about that in a minute. There's a couple of clouds in the background, which might speak to recent FOMC minute commentary, but let's talk about that. Anyway, here are the things that you need to know to get your day started. And by now, you have to know that Nvidia just blew the place apart, right? Traders took it up and through $1,000 last night in the post-market session. The FOMC reveals that there are many members who remain concerned. We'll talk about that as well. Oil tests lower as higher rate concerns create concern about future demand. Gold backs off on those same higher rate concerns. And the services PMI is due out at 8:30 this morning. And household help costs in Palm Beach are surging. And what do we have at dinner tonight? We're going to have the spring pasta. It is simple and it is delicious. Okay. Remember I said there was only one thing that you really needed to know about yesterday, and that was all about Nvidia, right? Okay. Leave that there because we're going to come back to that in just a moment. But there was also the release of the May FOMC minutes. And yesterday I said I didn't think that we were going to learn anything new. And in fact, I was correct. I didn't learn anything new. I'm not sure about you. But what we did learn, there is concern that is rising over the whole sticky inflation issue, right? And that did send stocks lower into the afternoon. Now, the Dow ended up losing 201 points, 0.5%. The S&P lost 15 points, or 0.3. The NASDAQ gave up 31 points, or 0.2%. The Russell gave up 16 points, or 0.6, while the transports added 23 points. They added 23 points, up 0.2. But remember, they got slammed on Tuesday, while the equal-weighted S&P lost 22 points, or 0.3%. So nothing really dramatic, but stocks were weaker. The minutes revealed what we all knew. So let me just say it again. Rates are not going down right now. They're not going down in June, not July, not September. And guess what else those minutes said? Ready? They said, quote, many questioned whether policy was restrictive enough to bring inflation down to their target, right? Remember, that's a 2% target. Minutes from the meeting also revealed that while some of the committee members, agree that they are well positioned currently, there are others that suggest they are willing to tighten policy further. And what does that mean? Rate hikes, not rate cuts. Okay, so let's just pull this apart for a minute, right? Many, if you look it up in the dictionary, it's defined as a large number. Now, the FOMC is made up of 12 members. So what's many? It can't be 1, 2, 3, or 4 because that's more like a few, right? I mean, 2 is a couple, 7 would be a majority. So I assume that many has to be 5 or 6, which represents 40 to 50%. So if 5 or 6 members are questioning the policy, that suggests that there's some concern that they are not sure that the current policy is working. In fact, participants noted disappointing readings on inflation over the first quarter is causing them the concern. And then guess what happened? Yep, Davey Solomon, CEO at Goldie, came out with a lead article on Bloomberg, and it ran like this. Goldman Solomon says he sees 0 rate cuts this year. Well, hello, welcome to the party, Davey. Where have you been all this time? And then this morning, the Wall Street Journal runs with the headline written by none other than Nikki T, right? And here it is. Fed minutes point towards longer wait for rate cut. Bingo. In his article, Nikki replaces many with an unspecified number of officials that are willing to raise rates if inflation materializes in a way that such action becomes appropriate. Okay, that about says it all as well. Now recall what I told you in the past about the relationship between the Fed and Goldie and the Wall Street Journal. When they want to leak a message or they want to leak the story, they turn to these two organizations, right? Goldman and the Wall Street Journal. So now, are you going to believe me when I tell you, don't hold your breath? Rates are anchored right here, and you better hope that inflation does not turn up in the next month when we get next month's CPI report, which by default should go up considering the very hot PPI report that we got only 2 weeks ago. Remember, and I hate to tell you this, the data from the PPI flows into the CPI. So as a hotter CPI, has to translate into a hotter PPI has to translate into a hotter CPI, as those higher prices at the producer level get passed on to the consumer. Okay, we all good there? Everyone understand? Right. And then there was the news of the day, Nvidia. And Jensen did not disappoint. In fact, if he wasn't already, he is now considered something of a god, right? Every piece of that report just blew the place apart. The doors, the windows, the roof, gone. Here's all you need to know, really. CEO Huang said that demand is just so strong that the next industrial revolution has begun. Yes, he blew away earnings per share. Yes, revenues blew the doors off. Yes, the data center revenues blew the windows out. And the 10-for-1 stock split just blew the roof off the house. And just to add more drama, he raised his estimates for the current quarter. He told us that the Blackwell AI chip, which is that newest chip, is ready to ship now versus later this year. And demand for the Hopper chips remains strong. And before you go, he acknowledged that with such strong demand, we can expect Nvidia to produce new generations of chips every 12 months. He described it as a one-year rhythm, right? I mean, I can go on, but do I need to? Is the picture clear? The stock surged by 6.4% or $60 a share in the after-hours session to end the night at 1,009. As my friend Dan Ives, who's managing director and senior equity research analyst at Wedbush, said, the party is just getting started. This morning in the pre-market session, Nvidia is trading even higher. It's up $6 now at 1,016. So after that, what else is there to say? Well, oil is once again testing trendline support at 77.5, as the idea of even higher rates caused many to scream demand destruction. WTI fell by 1.8% to end the day at 77.25, below the trend line. But this morning, it's once again struggling to hold on to that trend line. It's up about 55 cents at 77.80. So here's the quick and dirty. Higher rates will boost borrowing costs, stealing money away from what could be economic growth, and weaker economic growth means weaker oil demand, and so that's what it is, right? That's the story that they're running with today. Now, I'm still bullish on oil and on energy. The U.S. is producing oil at record rates, driven by advances in technologies and demand. But I want to see what it does, now over the next couple of days here. If it fails to hold this trend line, then we could see oil trade down to the 75.50 area, right? A move I don't think is going to happen, but it's a level that the kingdom also doesn't want to see. Recall, they need to see oil trading at 80 plus, and we know that they've already extended production cuts through the end of the year already, and the question now is, are they going to increase those production cuts if oil continues to slide? Gold also took a hit after the FOMC announcement. The idea that rates are going to remain higher for longer, or God forbid, go higher, is not a positive for gold and other precious metals, right? Gold fell by 1.8% yesterday. It's down another 1.2% this morning, going from a high of 24.77 earlier this week to 23.87. Trendline support is at 23.41. We're about to test that, and if the narrative continues to be possible rate hikes, then watch as that trend line fails to support the trend, taking us back to potentially 2,300 on gold. Eco data today is all about the manufacturing and services PMIs, right? Are they going to show contraction or expansion? Remember, we are a 75% services economy, and the services PMI is expected to be 51.4, which is in expansion territory. CNBC is running with a story this morning about how household help in Palm Beach is out of control. Demand is surging and supply is short. Palm Beach-style hospitality home professionals are demanding compensation of $120,000 to $200,000 a year plus benefits, 401k plans, healthcare, maternity leave, paternity leave, etc. Time off, it's all in there. In addition, we're also going to get new home sales today, expected to be down 2.2%, while the Kansas City Fed manufacturing number is expected to be -7. This morning, U.S. futures were up, or they are up. Dow up 35, SP's up 28, NASDAQ's up 165, and the Russell's up 6. I'm looking for the NASDAQ to pierce 17,000 at some point today, hopefully earlier rather than later. It closed at 16,801 last night, and with NASDAQ futures up 165 points in the pre-market, we're just a hair away from creating another index record. In addition, expect all kinds of chatter around the FOMC minutes and the latest Jamie Dimon commentary, which wasn't bullish. JP Morgan expects to see the S&P fall by 20% this year. They have an S&P target of 4,200 by the end of the year. And he's not ruling out this hard landing, saying that the worst outcome would be stagflation. Now, I want to note, this is not a change of heart for JP Morgan. This has been their stance. But after yesterday's FOMC minutes, it's on top of mind once again. European markets are mixed, right? Nothing really dramatic. Spain is down about 0.2%, while the Eurostock index is up 0.4%. UK's Rishi Sunak announces a general election on July 4th to help settle the score over the national vote. As the polls stand now, the Conservative Party stands to lose in this vote. The center-left Labour Party stands to win. UK inflation figures came in hotter than expected, and that slashed the whole rate cut debate and bet that was expected to happen in June. The S&P closed at 53.07. It was down 14 points, right? There's going to be all kinds of action in the markets on the back of the Nvidia results today for sure, especially in the tech space and NASDAQ, all that. Expect to see markets rally as the newest industrial revolution takes root, right? Any sector, and there's a lot of them that are using AI anywhere in their businesses are going to go along for the ride. That's really a lot of them, right? Now, that doesn't mean that you take all your money and go all in today and say, I have to get in. It just means you make sure that you have a well-diversified portfolio with plenty of exposure to this new tech, this new industrial revolution, right? Again, this is not the time to fall asleep. It's a very exciting time to be alive. And look at me, where this is right now. It is a gorgeous place to be alive. And it's a great time to be a long-term investor. So grab your coffee and let's go. Call me to discuss. I'm always happy to talk to you. Okay, so what are we having for dinner tonight? So it's springtime, and this is a great springtime recipe. It's full of green vegetables and pasta. It's really, really good. It's a simple dish. Probably takes you all of maybe 30 minutes to make, and it will be a game changer, right? If you enjoy pasta and peas with broccolini and asparagus, basil and pancetta, this is a no-lose situation. So for this, you need a pound of medium shells, pasta shells. You can use any small pasta you want, but pasta shells works great. You need frozen peas, asparagus, trimmed and cut into bite-sized pieces while you leave the flour whole. You want broccolini, the same thing, trimmed and cut into bite-sized pieces while leaving the flour whole. You want fresh basil leaves, white wine, diced pancetta, a diced onion, shallots, garlic, olive oil, and of course you want fresh grated Parmigiana cheese. You want to begin by bringing your pot of salted water to a rolling boil, leave it on the back burner so that it's ready when you need it. In a large saute pan, right, one big enough to accommodate the pasta, you want to begin by heating up the pan on medium-high heat and add the olive oil, go to around 2 or 3 times. Next, add the diced pancetta, cook that until it renders all the fat and turns nice and crispy. Now, remove that from the pan, leaving the oil and the fat in the pan. Now you're going to add your diced onion, your shallots, and your garlic, right? Saute that for 5 to 8 minutes. Add in a half a cup of white wine. You can substitute chicken broth here to deglaze the pan. Let it deglaze a little bit, let it kind of boil away a little bit. Now add in the peas, the asparagus, and the broccolini pieces and saute that around for about 10 minutes, right? Because the wine will evaporate until you'll just be back to dough. Saute that around, season it with salt and pepper, turn the heat down to medium-low. Put it on the side. Now put the pasta in the pot, cook that until it's al dente. It's like 8 minutes, you know the deal there. Using a slotted spoon, transfer the pasta from the saute pan and add it to the large saute pan. Now add in the fresh basil. Now add in a ladle or 2 of the pasta water, right? Otherwise known tears of the gods. But this is going to depend on how much you cooked. If you use less than a pound, then you're going to use less water. If you use more than a pound, use more water, Gavish. Now, add in a handful or 2 of fresh grated Parmigiana cheese and bam, there, you're done. It is so delicious. Serve this immediately with your glass of white wine, a chilled white wine. You know me, I always use the Pinot Grigio Santa Margherita. But you can use any white wine you want. And if you don't want to drink wine, just have whatever you want to drink. You know, an iced tea is fine, an Arnold Palmer is fine, a glass of water is fine, whatever you want. In any event, it is another glorious day here in South Florida, and I'm hoping it's going to be another glorious day in the markets. Until tomorrow, take good care.